Kinross has reported their third quarter financial results, and refreshingly, the company has beat expectations. Immediately following the results, the gold producer actually saw positive momentum, as it was one of the few miners this earnings season to meet expectations. Folks, we're talking earnings, we're talking Q3, we're talking Kinross. Let's dive in. Okay, so let's start with the high level. For the third quarter of 2024, Kinross reported top-line revenue of $1.4 billion versus analyst expectations of $1.2 billion. Metal sales improved by 30% on a year-over-year basis, which can be attributed to a 28% increase in the average realized gold price per ounce, jumping from $1,929 per ounce to $2,477 per ounce. Attributable ounces produced during the quarter hit 564,000 ounces, a 3.6% decline over Q3 of 2023. However, there was a 5.4% improvement over the second quarter. Attributable ounces sold came in at 551,000 ounces. All-in sustaining costs also increased, climbing to $1,350 per equivalent ounce sold, up from $1,296 in the year-ago period. However, this was a 4% gain versus the substantial 28% increase in the aforementioned improvement in average realized gold price per ounce. Operating earnings for the third quarter totaled out at $548 million versus $226 last year, while net earnings came in at $355 million, a 223% jump over the $110 million reported last year. Earnings per share as a result climbed substantially, jumping from 9 cents in the year-ago period to 29 cents in the most recent quarter. Adjusted earnings, meanwhile, came in slightly lower at $299 million, while adjusted EPS hit 24 cents. This led to attributed free cash flow for the quarter of $415 million, a new record for the company and a 201% jump over last year's $138 million figure. Kinross closed out the third quarter with cash and cash equivalents of $473 million, compared to $480 million as of the end of the second quarter. While the cash position declined, the company notably repaid $350 million on a term loan during the quarter, and a further $100 million post-quarter end. Kinross also highlighted that the term loan year-to-date has seen $650 million of the $1 billion loan repaid. Total liquidity, meanwhile, stands at $2.1 billion. And despite the slightly declining cash position, the gold producer declared a 3-cent per share dividend in connection with the release of the earnings results. On the operational side of things, the third quarter saw Kinross deliver a much-awaited preliminary economic assessment for their Great Bear project, which they acquired back in February of 2022 for $1.4 billion. The PEA delivered a net present value of $3.3 billion based on $2,500 per ounce gold and annual production of 431,000 ounces of gold across a mine life of 12 years. Elsewhere in its portfolio, Kinross saw its strongest production at Tayshest, although production here declined from 171,000 ounces to 162,000 ounces on a year-over-year basis, which was blamed on declining mill grades. La Coipa and Round Mountain also saw production declines year-over-year, which was blamed on lower mill throughput and lower recoveries, respectively. Optimization initiatives are said to be currently underway at La Coipa as a result of the production decline. However, guidance is said to remain on track. While at Round Mountain, an expansion to the leach pad has also been completed, with solution application permits now completed. Production saw an improvement at Paracatu due to an improvement in grade. However, the star of the quarter was the Fort Knox mine, which saw production more than double year-over-year from 72,000 ounces to 149,000 ounces. The massive improvement, which quite frankly saved Kinross's production numbers this quarter, was a result of processing higher-grade ore from Manco, while construction and commissioning of the mill modifications at site were also completed. Okay, so let's get into the company's outlook. For the full fiscal year, Kinross has said that they remain on track to meet their production guidance of 2.1 million ounces of gold equivalent, while guidance has also been maintained for their production cost of sales, all-in sustaining costs, and capital expenditure guidance ranges. For reference, the company previously guided to production costs of sales of $1,020 per ounce, all-in sustaining costs of $1,360 per ounce, and capital expenditures of $1 billion. All of which are said to contain a plus-minus range of 5%. Production has also been forecasted to remain stable at 2 million ounces of gold equivalent for both 2025 and 2026. Okay, so let's get into the investor reaction. Well, the company beat expectations. Let's not beat around the bush here. The positive results were drowned out a bit by that big event that happens every 4 years that divides one of the most powerful countries in the world. Yep, investor eyes weren't exactly on gold producers today. They were on the U.S. election. That being said, the equity was positive in after-hours trading following the release of the results, closing up a modest 1.7%. That being drowned out by the election also extended to social media, in an industry that tends to have a little commentary already as it is. That being said, investors were more excited about the results than the markets would have you believe. CEO Technician referred to the results as placing Kinross into a league of senior gold producers, while referring to Kinross's cost of containment as being at an unthinkable level. Yes, that was in a positive way. Others referred to the quarter as being a blowout and as very nice. Okay, so let's wrap it up. It was a decent quarter for Kinross, but with that being said, they do have some problems on the horizon. Production was down on a year-over-year basis at 4 out of 6 mines, while production costs were up at 5 out of 6 mines. They may have contained costs somewhat, but it also demonstrates that they may have a life of mine problem sitting on the horizon. Now, I've talked about this before, and if you're a junior mining investor, this is such a good thing because companies like Kinross are going to have to keep looking for acquisitions, which means that there's opportunities for us as retail investors to go find those names that make sense for companies like Kinross to go and find more resource. And let's not kid ourselves about Great Bear. In a $2,500 gold environment, that project might have a net present value of $3.3 billion, but let's not forget that they paid $1.4 billion for that same asset. Quite frankly, they got lucky that the price of gold moved up because at $1,950 gold, that net present value sits at just $1.9 billion. Should they get Great Bear up and running this decade, then it might push Kinross definitively into the senior producer category. But if they don't get it up and running before those other mines are depleted, well, I guess the best thing that they got is something in the pipeline. Like I said, guys, Kinross is a company that's probably going to be looking at some of these mid-tier type companies that have projects, single asset producers that get projects to that last finish line of development. And those are the names that we really should be looking at. But that being said, like I've been saying about all the gold producers, the difference between $2,800 gold and $1,800 gold is massive. It's an extra $1,000 to the bottom line, less royalties, and probably a little bit of inflation. The point is that right now, if you are watching this video and you made it this far in, you are in the right place at the right time, because it's only a matter of time. It's only a matter of time until real portfolio managers with real money start placing it into names like Kinross. And I think that these are names you should be doing your homework on. And the fact that you watched this video and made it this far tells me that you're one of those people. All right, everybody, thank you for watching. If you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Are you long Kinross? Are you thinking about going long? What do you just think of the earnings? What other gold names should we cover this earnings season? Thank you, everybody.